Good morning, good evening, good afternoon, depending on where you are in this world. This is Hedgen Lee with the daily S&P 500 Index review. So the market has opened about half an hour ago, a little more than that. And right away it started continuing this ABC pathway. And it's already started declining. So one thing that should be noted here, let's zoom in just to see it better. Get rid of the lines so you can see the price bars. Okay, there you go. Let's get rid of the lines for the blue also. Good. So if we have the ABC here, and C, remember, is targeting the 0.786 right here. And if it's targeting the 0.786, then that would bring the S&P to around 2,705. So it'll decline another 50 points, potentially, likely, probably. Now, is it possible for the price to just start going zinging up? Yes, it is possible. Is it possible for the price to just crash to a new lower low beyond this, white wave 2? Yes, it's possible. Anything is possible. As an analyst, I put a big difference between possibility and probability. And as an analyst, my job is to profile as many quote-unquote possibilities, and from there identify the probabilities. And from that handful of probabilities, identify my primary as well as the alternates. That way, I get the greatest perspective or scope view of the possibilities and what I think based on pattern and Elliott waves and indicator are the probabilities. And having gone through as many possibilities possible, I have therefore made myself as much aware of what price pathways that the S&P can take. And that means that if something like a unexpected trajectory in price occurs, is pretty likely that I've already profiled that. So after a while of doing this, the first reaction is not shock or surprise or disappointment. Used to be, for me, whenever it didn't work out to the projection pathway that I made, I always got very disappointed and upset. But now it's very interesting. It's very interesting to see that price, basically sentiment, had decided to take another pathway. And that pathway opens up a myriad of windows of other possibilities. So sometimes people say, well, Hedgen, last week you said this, but today now you're saying that. What gives? Well, what gives is exactly what I just explained to you. At one moment to the next moment, the potential possibilities can be immense. But I have done this for 20 plus years, and you can generate a good number of possibilities. So it really becomes a valuable way of, yes, there is a way to consistently profit from this methodology. They are losing trades, absolutely, but you have a greater abundance of the winning trades. So for that reason, that is why I've kept it, kept at it. And I guess to me, the bottom line, a technical analysis is not an intellectual concept. It's an experience. It's an experience that you have to capture by failures, a good number of failures, because they're the better teachers than successes. So by failure and success, you're able to catch the boatload of experiences to allow you to be able to culminate everything into the analysis, type of analysis that I give, and you may be able to do it, and probably maybe even do it better with a given amount of experience. And once you get the hang of it, that's when you really kind of see and apply the experience. Okay? So anyways, going back to this, I think the C wave has started. And if we look at this again, then the subwaves of this can be counted as 1, 2, 3, 4, and 5. And if these subwaves are correct, then likely what will happen is that as time progresses, maybe today, tomorrow, we'll finish the 1. There'll be a bit of a bounce for wave 2. Then the longest decline will be 3, 4, and 5, and that should complete the subwaves of C of Z. And that means this blue 1, 2 will have completed, and the blue 4 will be in progress. And I think this 4, white 4 is way off. Okay, let's put that to the side for now. And yes, the 0.786 is the target. However, bear in mind what is the golden ratio. The golden ratio is 0.618. So yes, this can be an alternate target too. So you can see a turnaround occurring maybe at 0.618. But yesterday I took you through the preponderance of evidence of how the prior upward wedges reached towards a 0.78. This one exceeded it. This one reached the 0.78 as well. And based on that, I'm putting this at the 0.78 likelihood as well. But also, still, keep aware that the 0.618, the golden ratio, the preferred ratio, so to speak, can also be the bottoming point for this too, because we are on a wave 3. If this is correct, we are on a wave 3, and from a cycle perspective, we're on a probably down, going towards the bottom of a 5-week cycle. So a turn is expected to start the next 10-week cycle. All right, I hope you found this to be helpful. I hope you have a wonderful day.